What is happening, crypto champions? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is absolutely electric today, with seismic shifts happening faster than you can blink. We've got groundbreaking developments that could redefine the game, and you are not going to want to miss a single second of this. Get ready, because the news cycle is firing on all cylinders, and we're diving headfirst into the updates that matter most. Stay locked in. This is the information you've been waiting for. First up, we're talking about a massive pivot in institutional investment. Forget what you thought you knew, because the data is in, and it's showing a surprising leader emerging in the world of digital assets. We're breaking down why a major player is suddenly outshining even Bitcoin in the eyes of big money. This is a game changer, and we've got all the details on why this shift is happening now. Then, hold on to your hats, because Bitcoin DeFi is making a monumental leap. We're witnessing an unprecedented flood of capital into a new lending era that promises to be trustless and revolutionary. This isn't just a small ripple, it's a tidal wave of innovation set to reshape how we interact with Bitcoin. We'll uncover the mechanics behind this massive $70 million influx and what it means for the future of decentralized finance. And if that wasn't enough, we're diving deep into the crystal ball with a bold prediction for Bitcoin's price. We're talking a colossal target that could see its value skyrocket, but there's a catch, and it involves some of the biggest players in the market. We'll dissect the crucial factors that could accelerate or delay this massive ascent, giving you the insider perspective. Finally, we're looking at the broader picture, asking if crypto is on the cusp of its biggest mainstream breakthrough yet, backed by a staggering investment case. Is this the moment we've all been waiting for? We're breaking down the numbers and the sentiment that suggest a monumental shift is imminent. Stick around, smash that like button, and make sure you're subscribed with notifications on so you never miss an update. Let's get into it. A new institutional favorite. In a stunning development that's sending ripples across the financial landscape, it appears Ethereum might be eclipsing Bitcoin when it comes to attracting institutional investment. Recent data suggests a significant shift in how major financial players are allocating their digital asset portfolios, with Ethereum ETFs reportedly surpassing their Bitcoin counterparts in adoption. This isn't just a minor trend. It signals a potential fundamental change in which cryptocurrency is perceived as the preferred asset for institutional portfolios. For a long time, Bitcoin has been the undisputed king of institutional interest, the primary gateway for traditional finance to enter the crypto space. However, this new data paints a different picture. The emergence and rapid growth of Ethereum ETFs indicate that institutions are not only diversifying their crypto holdings, but are actively choosing Ethereum as a more attractive investment vehicle. This could be due to a variety of factors, including Ethereum's robust ecosystem, its utility beyond just a store of value, and its potential for future innovation through upgrades like the recent Dencun upgrade that significantly reduced transaction fees. The implications of this shift are profound. If institutions are indeed favoring Ethereum, it could lead to increased demand for ETH, potentially driving up its price and solidifying its position as a major financial asset. It also raises questions about Bitcoin's long-term dominance as the primary institutional crypto asset. While Bitcoin remains a significant store of value and a well-established digital gold, Ethereum's programmability and the vast ecosystem built upon it, including DeFi and NFTs, offer a different kind of value proposition that institutions are increasingly recognizing. Analysts are closely watching this trend, with many suggesting that Ethereum's smart contract capabilities and its role as the backbone for a multitude of decentralized applications make it a more versatile and potentially more lucrative investment for long-term growth. The success of Ethereum ETFs could pave the way for even more innovative financial products tied to the Ethereum network, further integrating it into the traditional financial system. This move by institutions suggests a maturing crypto market, where different assets serve different purposes, and Ethereum is proving its mettle as a preferred choice for serious capital. This transition is a clear indicator that institutional investors are becoming more sophisticated in their understanding of the crypto market, moving beyond a one-size-fits-all approach. They are now looking at the underlying technology, utility, and growth potential of different digital assets. The fact that Ethereum ETFs are leading the charge in adoption suggests that the market is evolving, and Ethereum's ecosystem is resonating strongly with the strategic objectives of institutional investors seeking exposure to the digital economy. But is this the only major shift happening in the crypto world? We're about to uncover a massive DeFi breakthrough that's drawing in millions. Bitcoin DeFi Unleashed, a $70 million trustless lending boom. Get ready for a seismic shift in decentralized finance, as Bitcoin DeFi experiences an unprecedented surge in capital, signaling the dawn of a new trustless lending era. Buidelpad's Lombard token sale has just shattered expectations, raking in an astounding $70 million and achieving an oversubscription rate of a staggering 1038%. This isn't just a win for Buidelpad. It's a powerful testament to the burgeoning demand for robust, decentralized financial solutions built directly on the Bitcoin blockchain. This massive influx of funds highlights a growing momentum for Bitcoin-based financial tools, challenging the long-held notion that DeFi innovation is solely the domain of other blockchains. The core of Buidelpad's innovation lies in its Lombard protocol, a groundbreaking system designed to allow users to collateralize their Bitcoin for stablecoins and other digital assets without relying on any centralized intermediaries. This trustless approach is the holy grail of DeFi, offering users greater control, security, and transparency. The overwhelming success of the token sale, with its astronomical oversubscription, clearly indicates that the market is hungry for such permissionless financial services. It underscores a significant investor confidence in the security and scalability of the Bitcoin network for complex financial operations, moving beyond its traditional role as just a store of value. This development is a critical piece of a larger puzzle, the maturation of Bitcoin DeFi. Protocols are rapidly emerging that offer lending, borrowing, and yield-generating services, directly competing with established players. Buidelpad's success is particularly noteworthy because it showcases how Bitcoin, with its immense market capitalization and established infrastructure, can serve as a powerful collateral asset in decentralized lending. This expansion has the potential to democratize access to financial services, providing alternative, open-source solutions that can challenge traditional banking systems. What sets Buidelpad apart are its unique liquidity pools and automated risk protocols. The project claims these mechanisms are specifically engineered to mitigate the inherent volatility often associated with DeFi lending. By offering features designed to provide stable returns with reduced exposure to market fluctuations, Buidelpad aims to attract a broader investor base, including those who might have been hesitant to engage with DeFi due to its perceived risks. The team is now focused on expanding its user base and bolstering security audits to ensure the long-term stability and reliability of its platform. The implications for the broader DeFi landscape are immense. As Bitcoin-based DeFi platforms continue to evolve and gain traction, they are drawing in both retail and institutional capital, blurring the lines between traditional finance and the decentralized world. This success story validates the vision of a Bitcoin-powered financial future, one that is more open, accessible, and efficient. The $70 million raised is not just capital. It's a strong vote of confidence in the future of decentralized finance on the world's leading cryptocurrency. But the excitement doesn't stop with DeFi innovation. We're about to explore a forecast that could see Bitcoin's value skyrocket, but there's a crucial factor that could determine its speed. Bitcoin's $150K horizon. Whales hold the key. Prepare for a potential surge as Bitcoin eyes a monumental $150,000 price target. But the path to this ambitious milestone is intricately tied to the actions of a few massive market players. David Bailey, CEO of the Bitcoin holding company Nakamoto, has pinpointed the behavior of whales, individuals or entities holding significant amounts of Bitcoin, as the primary determinant of when this target will be reached. According to Bailey, The current pace of Bitcoin's rally is being dictated by concentrated selling pressure from these large holders, with the implication that once this pressure subsides, the market could see an up-only trajectory. Bailey's recent statements suggest that the market is currently being held back by just two major whale entities. He indicates that one has already made significant moves, and another is halfway through its selling process. This implies that as these large holders divest their positions, they are creating headwinds for the price. Bitcoin was trading around $110,240 at the time of the report, meaning a move to $150,000 would represent a substantial 36% increase. The impact of these whales is not theoretical. Recent market events illustrate their power. For instance, in late August, one whale offloaded 24,000 BTC, valued at approximately $2.7 billion, triggering a sharp market downturn that liquidated $500 million in leveraged positions within minutes. This event starkly demonstrated how quickly large sell orders can influence price action and create volatility. Adding to the market sensitivity, another whale recently moved $4 billion worth of Bitcoin into Ether via a decentralized exchange, further rattling market sentiment and suggesting a potential rotation of assets. These large-scale movements have left many traders on edge, contributing to a dip in the crypto fear and greed index, which recently fell into the fear territory. The sentiment is clear. Until these dominant players finish their selling cycles, Bitcoin's upward momentum may remain constrained. Data from analytics firms like CryptoQuant offers further insight, suggesting that recent pullbacks were not driven by long-term investors exiting the market, but rather by short-term speculators taking profits at record highs. Analysis of trading data from exchanges like Binance indicates that surges towards resistance levels, such as the $124,000 mark, were met with profit-taking by short-term traders, exacerbating downward pressure. However, the resilience of long-term holders, who largely maintain their positions, signals underlying confidence in the broader market structure and Bitcoin's long-term prospects. This divergence in behavior between short-term traders and long-term holders is crucial for understanding market dynamics. Despite these short-term pressures, the long-term outlook remains bullish, with prominent figures like Michael Saylor and Robert Kiyosaki continuing to predict significant growth for Bitcoin. Furthermore, the increasing adoption of Bitcoin exchange-traded products, ETPs, is a strong indicator of institutional acceptance. While global Bitcoin ETPs saw outflows in August, Ethereum products experienced substantial inflows, highlighting a dynamic shift in institutional preference. However, the sheer volume of Bitcoin held by ETPs, exceeding 1.47 million BTC, shows sustained institutional interest. In this context, the actions of the remaining whales are the key variable that could unlock Bitcoin's next major price leg. As we look at these market dynamics, we also need to consider the broader implications for crypto adoption. Is the entire ecosystem on the verge of a mainstream breakthrough, supported by a massive investment case? Crypto's mainstream moment, a $700K investment case for the future. Could we be on the cusp of cryptocurrency's most significant mainstream breakthrough yet? A compelling investment case, potentially valuing Bitcoin at an astonishing $700,000, suggests that the digital asset revolution is poised for widespread adoption. This isn't just speculative chatter. It's a narrative built on the increasing integration of crypto into the global financial system and a growing recognition of its potential as a transformative technology. The argument for such a massive valuation hinges on several key factors. Firstly, the continued institutional adoption, as evidenced by the growing interest in Bitcoin and Ethereum ETFs, signals a growing acceptance by traditional finance. These financial products provide a regulated and accessible gateway for institutional capital to enter the crypto market, driving demand and legitimacy. Secondly, the ongoing development and scaling of blockchain technology, including advancements in areas like Layer 2 solutions and interoperability, are making cryptocurrencies more practical for everyday use and a wider range of applications. Furthermore, the increasing interest from governments and regulatory bodies, while sometimes challenging, also indicates the growing importance of cryptocurrencies. As regulations become clearer, they can provide the stability and confidence needed for mainstream adoption. The potential for cryptocurrencies to offer more efficient, transparent, and accessible financial services, particularly in regions with underdeveloped traditional banking infrastructure, is a powerful driver for global adoption. The narrative of crypto as a hedge against inflation or a store of value, similar to digital gold, also continues to resonate with investors seeking diversification and protection against economic uncertainty. The $700,000 Bitcoin investment case, while ambitious, reflects a belief in the exponential growth potential of this nascent industry. It suggests a future where digital assets are not just niche investments, but integral components of the global economy. This vision is supported by the increasing number of companies integrating crypto payments, the development of decentralized applications, DApps, that offer new services, and the growing understanding among the general public about the benefits of blockchain technology. However, achieving such a valuation and mainstream breakthrough is not without its challenges. Market volatility, regulatory uncertainties, and the need for greater user-friendliness in crypto interfaces remain significant hurdles. The success of initiatives like Bitcoin Hyper, aiming to improve Bitcoin's transaction speed and cost, also plays a crucial role in enabling wider adoption. Projects focused on solving these fundamental issues are critical for unlocking the full potential of cryptocurrencies and bringing them into the mainstream. Ultimately, the prospect of crypto's mainstream breakthrough is tied to its ability to deliver tangible benefits and overcome its current limitations. The narrative of a $700,000 Bitcoin is a powerful one, representing not just a financial target, but a vision for a future where decentralized technology reshapes finance and beyond. It's a future that hinges on continued innovation, strategic adoption, and the collective belief in the transformative power of digital assets. And that wraps up our deep dive into the latest market movements. But what were the biggest takeaways from today's explosive news? And that's a wrap on today's electrifying updates. We saw Ethereum ETFs potentially taking the lead in institutional adoption, a massive $70 million surge into Bitcoin DeFi for a new era of lending, a bold prediction for Bitcoin hitting $150K driven by whale activity, and a look at crypto's potential $700K mainstream breakthrough. Don't miss out on any of these massive shifts. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, drop a comment with your thoughts, and follow us on all social platforms for more. We'll see you in the next one.